going on, Zach? Get everybody in here. Happy I took profits at that first. Was having a little bit of difficulty. Let's see what we got going on here. That was actually a little bit hairy there for a sec. This was nice. Nice urgency. Let's go. Weak, bang. Okay. At the new 15-minute candle. This blue line is our hourly CST. Good morning, good morning, good morning. Concern is exactly this. Get rid of all of that. We were talking yesterday, the daily was a little bit overextended. And my personal viewpoint of FOMC and everything else is that we need to pull back. And whether that first pullback ends up coming into here in the coming days or what, that's basically our expectation. We've got this, which is a little bit overextended. If we're being very, very accurate, then we're looking at this exactly. And all of a sudden, we're going, okay, ruh-roh, right? But that in itself isn't really anything. It's, do we get any sort of confluence? And I don't really see a ton of confluence in this. I liked this candle here from yesterday. And all of a sudden, that makes more sense. Now that's actually at the top of a daily zone, and you got a 15-minute termination level. Okay. Didn't quite hit the midpoint. You'll have to forgive me. That was a 1.5 off. 1.5 off. And these areas end up respecting. You essentially want to see if it's going to ping pong and go from here to here to here, double top, go. Then away you go. And the more I look at this chart, the more I'm thinking I'm a fool for not holding my short, at least to Asia lows. At least to Asia lows. Why is my camera so zoomed in? What the hell? You guys see my nose hairs or something? Look at this. Look at that. God damn. God damn. So when you guys are looking at this, you've got a couple of different things for your perusal. First off, you want to know your direction. Right? And we can tell pretty clearly from this morning, bearish. This did not sweep the 9 a.m. high. That's a prick. That's a prick. That has a very, very high probability of doing that and then dropping. And it didn't. And it did not. That also didn't touch the midpoints we talked about. That's also a prick. Very, very annoying. Now, when you get these large candles as a response, you're expecting a large move. If you get small candles as a response, you're expecting smaller moves, right? So small, small S&DR projection, small S&DR projection, small S&DR projection, small S&DR projection, blah, 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 and so on and so forth, right? Like if we were to look at sort of the response after this, you're basically looking at this here. Well, that's actually a little bit weak, right? I'd probably draw it from, if I was doing that, I'd be drawing it from here. And it's not like to catch the bottoms, right? It's to look at where the manipulation is, what the actual chart wants to do. Respects the midpoint after trading into this, gone. Happy days. Okay, but what I'm saying is that we're not expecting a massive movement down because the S&DR wasn't massive. Hey, Demetrius. Right, so you might get a rally after taking these lows. I took a good chunk out of this, but didn't hold for this drop. Didn't hold for the 950 drop. Should have held for the 950 drop, but I didn't. So we'll see what goes on here. Hourly's obviously flipped, which was definitely needed. We're at the bottom of the daily zone now, so that'll be interesting to see what goes on. Right, Charlie's all the way up here. Assuming it closes below this level in about 5 minutes. So rode that down. Do we get it? Do we get it? Now, if this isn't climactic, as in we just sort of chop around in here, especially if we chop around before 10 a.m. and then just continue on, then we are in for a daily move. And that would mean probably no longs for me until noon. Would be my guesstimation. Would be my guesstimation. So we'll see what ends up happening with this. Hey, Nisnos, how you doing, buddy? Am I planning for long? I think the better idea for today will be, if you do get a retracement, to then hit it short. Now, that being said, that's if all things are considered equal. And honestly, the day before FOMC would, if somebody was asking, would I expect a major trend day? Not necessarily. However, this is major trend price action. You break, you trade back in. This is a bear trade back into this at all, and then a violent push. So if there's a rally, it's going to be violent. Even if it only goes to here, you're very, very likely going to have something like this. But the day before FOMC, I would expect today to be somewhat of like either a bearish candle or range or something like that. And, I wouldn't be expecting this to just drop and then FOMC kind of range or something like that, right? So why is that important? It's important because the chart's telling us expansion to the downside from a higher time frame. The macro, or at least the weather conditions we're in, talk about range. So there's a bit of a issue there, in my opinion. I do think that a long will come in. I'm honestly kind of looking to see what ends up happening short if we take this high and then you get some sort of a flip or whatnot. Especially if that flip happens like inside of like this area, which was responsible for all of this. But today won't be a day for me to try and catch bottoms. This. Oh, you can't see it. You can't see it. I don't even think you can see it on that anyway. Yes, me too. There's in the bottom right, the B/adjust. Adjust for contract changes. You can kind of see it. You can kind of see it on the screen. Right? So if I don't have that and I have this, then what the hell's going on over here? Right? But now if I hit that button, that B-adjust, then it deals with that. Morning, Solo. But look at that, eh, Dennis? Look at this. Outrageous. Outrageous. New hourly coming in 10 seconds. It's my little one's first day of big school today. It's the first time she'll be gone for more than 3 hours. It's going to be an interesting day. Something big is coming at ETF. I can't say much about it, but I will say that a lot of your guys' concerns were, well, I mean, they look at everything that people are saying. They're one of those firms that definitely do that, you know. They're not just like, okay, everybody doesn't want this or everybody wants this, but who cares? Right? They're not like that. But something big's coming this week. So that's going to be exciting for you guys as well. It's really, really cool. Just as a heads up. Just as a heads up. If you're planning on grabbing some accounts or doing anything like that. Just giving you guys a little bit of a heads up. Yeah, I don't know. This is having a hard time. I think if we expand, I probably won't take this long. You don't get a flip here at all. We've got a violent candle. You got a violent candle. FOMC tomorrow, quad witching this week. Man. That's not exactly super confident after taking this candle's high. People will look at this, but it's a market structure shift. Yeah, I suppose that's true. For a pullback. You got to think of it in the context of what you're doing, right? What do you need to see on your actual time frames that are in control? You're getting this compression candle on your 15 so far. One of these is going to get taken. Right? One of them. You've taken a lot of liquidity on the downside. Good. Right? But as long as we continue failing in this, right, just means that we're stabbing through. Doesn't mean much yet, but again, I'm not looking long. Not looking long yet. Not yet. These are decent sized candles though, 15 points compared to what we had to deal with yesterday. Yesterday put me to sleep. I don't know about you guys, but that action yesterday put me to sleep. No tanks. Morning, noob. Do not get caught in the range. Do not get caught in the range. And by in the range, I mean at the middle of the range. So you're either buying at the low, expecting this to be some movement up. Okay. Can I get behind that logic? I suppose I could. But you want to see breakthrough, right? Or rather, if you're looking for a flip, you need to see a flip. This is not flipped yet. This week will be, not to scare anybody, but this week is and will be a challenging week for the vast majority of traders. You've got contract rollover, all the witchings. You've got FOMC tomorrow. You've got the rollover itself. And we're at all-time highs and overextended inside of a range as people sell off old business, people wait for FOMC, people have a hard time trading OPEX as it is. So what you get is you get these never-ending consolidation. So spike, 20-point chop, leading to expansion, leading to light pullback, leading to light expansion, leading to, right? So we just stayed inside of this range of pretty much 50 points all morning and day. Yuck. This is yuck. Morning, Frank. Now we're starting to respect the midpoint of this, so you're sort of leading to the upside now. Morning, Matthias. Again, I'm not sitting long. I took a short, and they will have to do something pretty spectacular for me to get involved today. And sweeping and failing multiple times in here is not going to do it. Okay. Ready for expansion? Yes. But not quite there yet. Right? You're 5, you're 15. Okay. Not exactly beautiful. Not exactly beautiful. Right? So if you're going to get along in here, whereabouts is your target? Let's say you took this one and it ended up being beautiful. Somewhere in here. Mid 30s, whatever. Where are you looking exactly? Are you looking to trade into this? You looking for this high? Right? No mouse. That's weird. There we are. All right, like what exactly is your objective? If you're going long here in the first place, are you looking to trade 5 points up into here? You're looking to trade at the other end of the range? You're looking, like what exactly is our goal or our objective? Because you have to have a reason in the first place taking along. Not just, I think it's going to go higher. $10.10. Little bit tricky in here on both sides. Stabbing into the area responsible for a large movement. We've taken Asia lows. This isn't how I would expect to rally. And this flip could get nasty if it wants to drop, which I'm kind of expecting, assuming this doesn't bounce violently off of this. Yep. Very well could. Absolutely we could. Seeing what happens at this midpoint here. I'm short right now. One off at the lows, looking for lower, but it's got to drop through here. Yeah, I wanted it up in this. I really wanted it up in this. Otherwise, like, people will look at this, I think, and I think that's fair, right? Again, we can find all kinds of reasons to pick tops and bottoms and all kinds of nonsense, can't we? Oh, I think I'm going to mitigate this here. I do think it goes lower and we're trading back into the area or the point of control. But this is a really good response if it wants to rally up a little bit. Yeah, I know. I know. I know. So we'll see if if taking it off is too eager. This volatility is really about, you know, we're catching 10, 20 points, 30 points, maybe if we're in an exceptional area of interest, right? But essentially, we didn't want this midpoint respected at all. And this is at the lows, so I wasn't wild about this. The only reason I'm drawing it like this is because we're failing here. That sends you up to your first. We come back down. That's actually a long. Given the context and everything like this, I don't really want to be shorting climactic action if we just drop and then range, right? If you've got this, you expect an equal push lower, unless you get an intermediate time frame drop. This 15-minute candle actually closed bullish. What the, right? Yeah. I think the rally comes in now. Absolutely, I think it does. I think that longing in here before we get this, that's your first trade scalp if it's going to work. And then if this fails, then we run. And I like how this didn't go, right? So this was either going to drop and we got like a violent movement. I was looking for the lows and I took it off. and now we'll see what goes on. $533 is a beautiful long. Beautiful long. This, if it trades back down to here, that should be bought up quickly. I don't expect it to because it's already done its job of doing that. We expanded, trade back in, should go now. Or 19.75 at a TP. No, did that happen? That's gross. 20.75. Yeah, that would have been. I suppose that would have been 20 points if I would have hit it right there, at the top of the range. That's maddening. It's maddening. That's actually exhibit A of why I don't trade. That's not true. I do trade points to points, but more objective than that. As in, if I'm short here, I don't care if this is 25 points. I don't care if it's 18 points. I'm not looking for 20. I'm looking for this low, right? Depending on, obviously, they don't know the time frame and whatnot. So like this was the prior hour low, so expect that to get taken, and it did. I like to position myself based off of whatever, that gets hit. You put it in the channel. No, I gotta have a look at this. No, the long you mean? Oh, that is painful. Yeah, that's the first trade scalp. That's a beautiful price action read for starters. Any of you guys that went long inside of this, that's a beautiful price action read. Right? And in all theories and senses, it should have hit where it just hit right now on this push. Does the market care? No. No, it doesn't. So what do we do? Right? For starters, this is where the first trade scalp comes in. Because if we're here, let's say we're here, and we're even considering a long, and you're like, okay, where's my first point of interest? Well, your first thing you need to look at is, where are people looking short? Right? If you're not in short, are you shorting here? Hopefully not. That makes no sense. Right? We don't gain confidence by that. We gain confidence by the market attempting to do something and falling on its face. Attempting to do something, falling on its face. Right? Hence the short that I took this morning. Market's trying to rally, tried rallying here, fell on its face. Tried rallying here, sweeping, finally swept above this, fell on its face. So if I'm right, it's going to fall on its face because it's attempting to rally and it can't. That gives me confidence in a short position. Likewise with longs, right? Market's trying to sell off. It can't. Falls on its face, mitigates, gone. Objective to objective. Right? That's how we gain confidence in trend direction. Not how violently it's moving, because we know that this shit is just suckering in shorts down here. We don't know if it's going to do this and then come down for it. If it's going to come down at all. Right? So if you're here, my point is that whereabouts are we looking? We're looking at this area here. Is this mitigated? Not really. If this is going to drop, what's going to happen after it barely touches it? Is it going to do this? No, it's not. Is it? It's going to do this and be trading here in the next 5 minutes. If. Right? So that means we're expecting higher, which is probably the reason you guys are looking long. And then the next step is, what do you want to see? And for me, the midpoint. This is now the algorithm, buyers, whatever you choose to believe in your trading religion. People are stepping up. It's stepping up. Whatever. And you're looking at least at the midpoint of this. And your first trade is a scalp for this reason, because this has not been mitigated yet. So your two things are, this either goes violent, in which case, what are we doing with our lows? Right? You're either following your lows up. If you're trading on a lower time frame, come on, right? Then you're out here. This gave no real warning at all. It just kind of stopped on a dime here and then dropped. Yuck. Right? But if you're expecting parabolic, your two options are, we either fail at the midpoint, which we did. Not saying that we have to, be Professor Xavier and, okay, this is the midpoint, that's where my target is, that's where the top's going to be. Whatever. That's not what we're looking at. We're looking at, we've got two options, the midpoint or blast through. Or we're wrong. Obviously, there's a third option there. We're not right all the time. Right? So for me, Violent movement. We're not blasting through this, which means it's still got some strength left, which means now we've mitigated. This pushing away violently should do what? Take this low. And it did. And whatever happens afterwards, and it's in the 60s now. I mean, random numbers on a chart. Random numbers on a chart? What do you think, Dennis? Random numbers on a chart? Should I be long? Yeah, probably. We might ping pong in between this. My main concern is that, as I mentioned, if we're either gonna range today, in which case you people that are looking longs, you guys or girls, individuals that are looking long, you're hoping for a range. You are hoping for a range, and your solace is like, well, the higher time frame's pointing up. Yeah, I suppose that's true. But we aren't trading based off the daily. This is your 15-minute. This is your 15-minute. Your hourly's flipped, your 15 minutes flipped. You've got, well, you'd probably look at this. So 566 is the midpoint of this current swing. This makes sense to me. 6250 is going to be a very, very key area of interest. Assuming we fail, it will fail inside of this zone on the 5-minute time frame. And that's pretty much all we need to know. If that fails, we head back down to this. If it drives through, we continue lower. And maybe even lower than that. You've still got your 9 a.m. low, which if you're asking me, hand to heart, do I think we're going to hit, where is that? 400 today? Probably not. Probably not. I was kind of looking for a range today. Right? And I think a lot of people are too. And they're probably smart to do so. Yeah. Some green crumbs. My daily goal drops by half during these weeks. I do not push it these weeks. I don't push these weeks at all. I ask for strength. I ask for the ability to help educate and push you guys through. Those that are eager to listen. But I do not size up on these weeks when with OPEX, with FOMC, with all of that, right? The other alternative is basically, if you're correct on your direction, if you're saying, you know what, this is either going to, this, let's say hypothetically you're like, okay, it's inside of this range, then you're taking, okay, 10 points. And this is how I used to trade, right? So maybe a 10-point short or something, or you avoid it short entirely because you're expecting more of a retracement, right? So 10 points, maybe another 10 points, until you get to your objective and you see some major failure. Right? This, to me, I would classify as pretty strong failure. You're not just getting one bear bar, you're getting multiple now. You're getting multiple. right? So this is where I would be a little bit cautious on going long down here. And I'm fine missing it if it bounces from here and goes on a rocket ship. If you're drawing it based off your 5. Again, this 5 can do a whole bunch of things, right? But you know, we did tap into our area, so I'm you know, respecting this range means for me I'm not looking long anymore. Hey! How you doing, Elementary? Am I pronouncing that right? We had an anniversary week where I basically went dark. Not gonna lie, it was kind of nice. It's kind of nice. Hopefully you guys made out like bandits last week. Morning, Andis. I don't know if I said hello to you yet. What's going on, buddy? Again, this is the area where people are looking to take some profits if we continue to range, or if it drives through, and that's an if. If it drives through, then you're looking far lower. If it does not, then we go back up. Ping pong, right? But again, I like that change in personality that we got here. Should we get some music going in this? What do you guys think? Caution, 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 caution. Red flags should be coming up. The red flags. I think. But we'll see. We'll see. I'm done for the day as well, but I'll hang out with you, you legends, for the next 15 minutes or 20 minutes or so until we see something fun go on. Right? The concern is that this wick, this isn't a flip. Well, I mean, probably is on the 1. No, it's not. How about that? How about that? We got the 5. What about your 4? Your 4-minute cleaner? Your 3? Ooh, the 3 flipped. Yikes. There you are. Your 3-minute time frame. Doing work. Either way. Wouldn't be shorting down here, of course, but I do think that that longs are in trouble if you don't get a violent movement out of here in the next couple minutes. What do you guys think? You guys have any huge questions? Anything fun? Or are we done? Dennis, are you still on? We're going to see if this gives me a chance to not be red today. Okay. Maybe. Maybe. I don't know if I'd hit that. I don't know if I would hit that. I think you'd probably want like something like maybe a closure here and then like some sort of equilibrium stab. I think that would be a little bit weird if it did that. 38.75, 38.75. Don't know if I'd take a short, and I think that's because this is stabbing into a 5-minute area of interest where I would expect it to trade back up. So I think that if it does trade up into this, it probably goes through it. So that would be a concern. Yeah, this is danger. This is danger for me. Yeah. Yeah. So the market is exceptional at creating edges that work for a small period of time. And that's not to say that you can only trade specific ways of trading for like a few months of the year and then you have to change your strategy or something like that. Right? You'll find that the majority of larger traders trade level to level. And I'm not talking about the ICT crew or whatever that you know, like, that are getting huge payouts when the market rewards that. But you'll notice that they all failed miserably for 7 or 8 years before that. There's a reason for that. For a very specific period of time, their edge was extremely profitable, and to their credit, they crushed it when it was. Right before it stopped being huge. You'll see things like a unicorn setup or whatever pattern, and all you see this week are unicorn setups. All you see are this, that, or the other. Or silver bullets. Silver bullets was a huge one. I think last year everybody was talking about the silver bullet. Gotta trade the silver bullet. And then there's no silver bullet anymore. Right? People have edges that work in very, very specific environments. And then they don't work. For example, if you're looking at a lower time frame flip, in very, very choppy environments, very, very, very rare will you find it happen. Right? This didn't even flip up here. And you could argue, okay, well, I mean, you know, we actually flipped long here, didn't we? So shouldn't I be riding this? Yeah, that could have worked. Absolutely, that could have worked. Right? I mean, you know, you would have taken some heat on this before it finally hit your target. And then it starts to get the multi-time frame analysis thing. So circling back around all this nonsense, and you can see, at least so far, why I wouldn't consider that fair value gap to be key. This actually failed to flip there. People will trade more level to level than anything else, or at least put more emphasis on direction and not specific entry patterns that seem to be beautiful or whatever else for very specific reasons. And people will look at, I don't even know if this is SBS, but at least my limited understanding, and I actually like Stoic a lot, where you got sort of like your 1, your 2, your 3, and then your 4 and 5 or whatever, and then you're expecting breakout. Hopefully that works. But the level to level idea does not care about market volatility. It looks at levels. It looks at whether this move is 100 points or 5 points isn't relevant. That's why a lot of people trade with trend lines. That's why a lot of people trade with directions or flags or whatever else. And then it becomes a matter of what's my risk. For example, if I'm long, let's say I'm long here and I'm expecting failure. Or I'm short here expecting that this is a flag pattern and it's going to run this low, which it did. You're risking a certain amount, and as your account grows, you take on more size as you become more confident in your execution. Right? So, okay, say this is a 10-point short and you're looking at something like this, right? Okay, we failed. Now, maybe I don't want it going 10 points. Do I get 20 out of it? Yes. Okay, so that trade worked out. I'm risking 10 points. As you start, you're risking $200. And now you work on your win rate. As your account grows, now you're risking $1,000 in low volatile environments. If this is 20 points to here, then you risk accordingly. If it's 40 points to here, you're risking accordingly. Right? But you're trading based off of objectives and levels. That's the level up. Now it's not patterns. Patterns give you a little bit of recognition of what the market should do objective-wise. But your trading has to reflect that. Right? So this trades up to this. I didn't like how it reacted here. So my personal idea is we're trading here and then lower. Now the market's making me look like a genius. Right? And I say this with a grain of salt because, as I mentioned yesterday, and this is one of my personal viewpoints, if I'm not in a short or I'm not willing to short here, I have no business saying it's going to fail here and then drive down to this. Right? Like, that's beyond arrogant. If I'm not putting money on the line and saying that. Right? The only solace is that if we're able to talk about it when it's failing here and I say I expect it to trade up to here and continue, there's reasons for that because we're able to replicate that in the future, which is why we were able to take trades out of here that made a lot of sense. Yeah, this is a range, right? We are in a range. And like I mentioned, this is how price moves. Either price is going to fail here, especially at Asia lows, and what are we expecting? Rally. As in, the market's now manipulated lower and it wants to drop or run. As in, finish business down here, gone. And we're now trading up to here and we're taking that 9 a.m. high. It very well could do that. There are many different ways that it can run this high out. Maybe it does this and you get your intermediate time frame movement and then this ends up being manipulation. You get a barely trade back in and then it goes. Right? Maybe it just goes on a rocket ship from here and there's some news that comes out. We don't know. There's multiple ways that could happen. However, if X, then Y, then Z, not before. Not before. Because if X doesn't happen, then you're not looking at everything that happens after that. Right? So if this doesn't blast and CSD on your 5, we haven't even put in a 5-minute valid low yet. So if we're hitting it and hitting it and hitting it and hitting it and hitting it, praying to the Lord that we're going to get 64.75, we might still, right? But how many like these pushes up are gifts if you're long. Because in reality, we haven't flipped. We haven't made a 5-minute valid low. Anything is a lower time frame push. Anything is a lower time frame push. You could argue we CSD'd on the 5 minute here, which is probably why we're in such a large range. We just flipped back. My guess is that we accumulate in here, we barely trade above, if we do at all, and then it drops down here to the 500s. And yes, I've been talking about that for the last half an hour because I didn't like this. Right? That's me being nitpicky, perhaps, as it continues to go, or whatever it wants to do. For those of you guys that are long, definitely don't want to talk you out of trades and look foolish, right? But this is not how I would expect a rally to occur. You may very well get something like this, and then something like this, and then something like this, and then something like that, and we stay in this range. Cool. But contextually, I do not like this for a blast higher. We hit terminus. We're now back at the area of interest initially, and we're not rallying from here yet. We've tried multiple times. We've tried for the last half an hour, 45 minutes. Hopefully you guys get really paid for your longs. And I'm out to lunch. Right? And it very well could. If it respects this area on the 5 minute or continues to. You got a new 15 minute coming in 20 seconds. If it runs the lows, it'll probably happen in the next 15 minute candle. Or right at the new hour. Right? I just don't like how it's now respecting this midpoint here. Yeah, no, today was good. As I mentioned, I really don't hit these weeks very, very hard. But I grabbed a short in here for this run. But I actually flubbed that short, so I was short in here, and then I took it off for some points in here. I just didn't really like how it was choppy. So I kind of missed this beautiful move, and then I hit this short here for that low, and that was the end of that. In hindsight, I think that there was a decent long out of it as well, and I think that a better short would have been sort of this here for that movement back down. Hopefully you guys are green, or at least looking. I wouldn't be looking like this. You would expect if it's going to just consolidate and dump, right? But again, you're shorting at the bottom of a range, hoping for expansion. Even if I do think that it's going to expand, it's not really how I would advocate sort of profitable trading systems, right? But man, that's a rough 5 minute candle to yeah, that's a rough 5 minute candle to long off of, even if it is at the lows. Even if it is at the lows, right? So I'd be cautious on longs unless you get something major, and I would need to see something like spike and then consolidating into here maybe. Like this very well could have, and then whatever, but we'll see. We'll see. But if I'm going to risk off of it at all, then I need to see something pretty clear, and I haven't seen anything pretty clear. Oh. Just realized you guys didn't have my smiling face. From that B adjustment all the way back down. Poor Dennis. Poor Dennis wondering what was going on. Still in it to win it. Let's go. What is wrong with this camera? No, can't be done. Can't be done. We'll go again tomorrow. If that continues to respect here, happy days, but man, oh man, oh man. That midpoint, I wouldn't, like these engulfing candles, they're strong price action, but man, you don't want to take bearish ones at the lows. If you knife through and close here, then you can take it on the inverse. You guys might be sitting in this a while. You know what? I love the inversion. The inversion of the inversion. Which makes it fresh again. Which inversion are you talking about? Are you talking about like this? Just trade the balanced price range, bro. Gets people cooked. Short in here. Mind you, I suppose that would have given you a few points on the way back down, on the way down initially. Oh. I want to see what the 11 a.m. candle does, and that's pretty much it. It's technically a flip as well. Flip, trade back in. Hopefully lifts to here. But did that it did not, that 5. Man, I'm pulling for you guys that are hoping for that rally. I'm pulling for you guys. Excuse me. Go, 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 go. No, you prick. Yeah, I'm actually getting, like, this is painful to watch. This is painful to watch. Is there typically, Interesting question. I think depends on your strategy. If you like to scalp and you like to take small movements, then you actually really like periods of low volatility, right? Like if you're taking, like the way I used to trade, for example, like you're taking 10-point moves and you're also long here, even if you're wrong, away you go, right? And VIX ends up being about like 16, 17, 18 ideally, 17, 18 ideally, but you're taking like small movements, but you have the volatility to be able to do that. What's the kryptonite of scalping? Large volatile moves, right? If you're long, you don't want this wick being like 20 points and taking a scalp here or whatever, right? Because even if you're scalping for 10 points or 20 points, right? You don't want your stop to be 30 or 40. Doesn't make sense, right? So scalpers actually do better in periods of low volatility, because if you're buying underneath, say, this low, you don't want your risk to be massive and you just want to collect your 10 points and you're happy, right? So scalpers got absolutely destroyed in periods of high volatility earlier this year. And usually if there's going to be major volatility, it's going to be in the first few months. If you look at VIX, right? This started ramping up. Well, it's actually a month, right? So February, March, right? That was actually August, so that kind of throws a little wrench into things, but I think there was a reason for that, right? And then we had some high volatility earlier this year. High volatility environments, February, March, whatever, right? December, January, February, 2018, 2019. Usually it's around then. So swing trading, you want high volatile environments. In terms of news and whatnot, yeah, usually the summer months, there's different anecdotes like sell in May and go away, right? Because your summer usually gives you either a pullback or it's chop or whatever it is. People aren't at the desk, there's no new business, all that sort of stuff. If you believe in that, of course. But I mean, if you're like kind of looking at like the main issue that we've got isn't necessarily that it's September. That's not really as relevant. Check this out. So these were our last 3 months. Now we finally expanded a little bit, but this is where we're at. Compared to February, March, April, May, June, even July, initially, right? Like these are actual like directional months versus like this sort of chop. Even this sort of chop, these months were 1,500 points in range, right? 1,500 points in range. That one was actually more than that. That's 1,900 points in range, right? This one was 1,300, 1,200, right? So we're actually in a very, very compressed environment for the last 2.5 months or so. That's what's really throwing a wrench into everything. It's not necessarily that it's September. Look at this nonsense, right? So the level up is understanding when, and I mean we have FOMC tomorrow, so how many different clues do we need to expect non-directional environments? And then essentially what you do is, rather than go, you know what, I'm going to say long here and swing this for this. And maybe that's your initial idea, and then as price develops or evolves and you get this, well, maybe you temper your expectations a little bit. So you've got two options. Your option one is that you scalp. Option two is that you don't trade inside of range-bound environments, right? Rather than change, like we don't want to strategy hop or go, you know what, I got to trade this way, or this way is not working, so I have to do this, or whatever. Yeah, I don't think there's anything statistically other than, you know, volatility not being huge during the summer in general. This is your hourly, by the way. Here comes your new hour. 5 seconds. We'll see where this goes, and then I'll probably bounce. But you see, we're inside of a 7.5 minute extension. For how long, basically? We leave it, we return back down to it. Yeah. I hear you. Right? Like who? We got what, 17, 20 people watching? Who's been bearish the entire morning versus who's been bullish? No, man. There's nothing more frustrating than a market that's going nowhere when we're trying to find some movement. Right? I've been bearish all morning for a very specific reason. And it's not necessarily just this. That's obviously a part of it. But it's how we've been rallying. That doesn't mean we can't make money long, but it means that if you're longing, you are longing as a retracement until proven otherwise. If you are bearish and you are shorting, your objective is to take lows until proven otherwise. That's market structure 101. And here we are. Far be it from me to look at this and be like, well, you know, don't trade against me or any of that nonsense. We both know that's all nonsense. Right? But if you're long, let's say you took a 1 minute flip anywhere after 9:45 in the morning. What's your objective? It's a retracement, or it's this high. Right? It's that high. And we tried, and then as soon as we flip back here, no more longs. And this to me was no more longs. No more longs. Shorting there was making me nervous. Beautiful. Yeah, so this is do not short. This is where institution shorts. This is where larger players are scaling in. That's not for us. Why? Because we don't know how far this is going to go. This. Oh, baby. You don't know that until this closes here. And especially after you get your new hourly that dumps. But you don't want to see that flip back bearish after this. And away it goes. Right? Now, when you see this accumulation for this period of time, now is when you start looking at this down here. That's when that's going to happen. Because this is not a 5-minute rally. This is not a 15-minute rally. Otherwise, you would have seen something around 10:30. This is an hourly, which means if we're going to run this low, what time is that going to happen at? You'll notice we ran this low at the turn of the hour. And then we ran this one at the turn of the hour. That's when time starts to factor in. I'm going to run away for the morning, spend a little bit of time with the fam before she goes on her first big day of school. And we'll chat with you guys a little bit later on. Maybe I'll post some charts in the group. But not quite at our 5-minute yet. And that's if we don't have anything on the 15, which, yeah, probably lines up would be my guess. Yeah, a little bit there, and then terminus. Well, you get a bounce from this, which we are. All right.